Good morning, everyone. Welcome to our latest Discord AMA. I'm your host, Brian. Co-host Vesnushki is here, and today we're going to be speaking with Seb. Today we're talking about the subject everyone has questions over, the recent 6.4 update and the tokenomic and incentive changes that have just been released on the medium. If you haven't heard already, there are some big changes coming to Gainsnetwork's tokenomic model, namely a mint and a buyback of NFTs. So no doubt there's lots of questions from the community. So Seb is here to answer them. So everybody, let's wish our guest a GM and get started. GM Seb.
Hey.
Right.
Hey,
so our first topic,
everyone.
6.4 and lookbacks.
Yes. So Seb, let's get started with the first topic, which is the 6.4 update. And there are two components which everyone's been waiting for: lookbacks, and also we're also tweaking the borrowing fee formula. How do you think these two elements will impact the platform?
Yeah, I think we're getting closer and closer to something really good. The lookbacks update, we've been working on it for a while now, for a few months, and we've even been discussing it for 1 year, I think, at this point. It's an idea we've had quite a while ago, but we've had a lot of different priorities in the meanwhile. But I'm very happy we managed to get to it now. So V6.4, as you said, is about the lookbacks and the borrowing fee change. So lookbacks basically allow our oracles to cache the prices in memory, so they remember the past prices, and that way they can always use the price corresponding to the timestamp on chain. So to put it simpler, for market orders, that means it registers the time when your market order happens on chain, and it uses the price at that time instead of just the current price, which for market orders it really removes any latency between the chain and the oracles. And for limit orders, it allows us to basically look, for example, 10 minutes in the past if the memory is configured to 10 minutes, and we can see if during the last 10 minutes your limit order could have been triggered, or if the price stayed outside the range. And that way NFT bots don't miss any order anymore. So that's how the execution is guaranteed. And there are a few more details to this, but yeah, maybe you have more questions. I think I've said a lot already.
So basically, like the oracles are going to keep price history, and they can look back at the price history.
Exactly.
Hence the name lookbacks.
Yep. So it allows us to never miss any order as long as the oracles have the candles cached in memory, and it allows us to guarantee the price also of the execution. And the way we do it is we look if the price crossed the order, and if it crossed it, in a single candle, so if there is no gap basically, then the price of execution is guaranteed. But if there is a gap, so let's say the price was at 101, then the market closed, then it was 99, and your order was at 100. That means it gapped down from 101 to 99, and that way your order wouldn't be triggered, wouldn't be guaranteed. So it will be triggered, but it wouldn't be guaranteed. because of course if there is a gap, that means the market never was at this price. So in that case, we just execute the order at the closest price once the market is open. But in all other cases, the price is guaranteed.
Awesome.
And
Yeah, one of the challenges of selling a DEX to a user coming from a SEX is that we have to innovate around the challenges of building on chain. So I think Gains has just continued to close that gap between a SEX and a DEX, and this is just another forward-thinking movement of on-chain DEX. So after 6.4, do you feel like there's any features missing from G-Trade from a UI UX perspective? What might be coming up next?
yeah, so I actually haven't really finished on lookbacks, but after that, I think the biggest thing will be partials, of course, because it's quite a crucial thing to have. So yeah, just to finish on lookbacks, so it will work for stop losses, take profits, limit order, stop orders, and liquidation. So basically, and also for market orders, it will improve the execution for market orders too. Because as I said, it will also look back for market orders to use the price exactly when your transaction was mined on chain. So it's I don't think many people know that it will also improve market orders, but it's the case. And another big UX thing is now when you update your stop loss, you don't pay a fee anymore. And it's instantly updated because we don't have to make a price request to the oracles anymore. Because the way the stop loss was guaranteed until now on cryptos was a bit different than now. So if your stop loss was set at let's say 100, it will be guaranteed in any case. And so it had to check that the current price was on the other side, basically. Otherwise, you could set your stop loss above the current price and make a profit. But now, of course, if you were to set your stop loss above the current price, it will see prices below. And since it didn't cross it, then it will just be executed at the current closest price, so the market price. So that way, you don't have to pay a fee anymore when you update your stop loss, which I think is a big point also for the UX.
Yeah, that is a big one. That is the traders are going to love that because we have all kinds of questions. Anything that we can do to simplify is a win. Yeah, I think that's a good change as well.
Yeah. So Brian, you deviated from the script and you stole my question. So I'm gonna go ahead and ask about the tweak to the borrowing fee formula, because that's something that's included in 6.4, even though it's not like the main thing, but it's an important thing.
Yep, we haven't really talked about it yet. So there will be two changes. The first one is that right now we divide the net open interest, so long open interest minus short open interest, by the volt. So basically, the borrowing fee is proportional to the exposure relative to the volt. But we are changing that to it being relative to the max open interest, because it was kind of weird to have some pairs that have maxed out open interest and still low borrowing fees, because the max OI was relatively low compared to the volt TVL. So the two formulas were a bit disconnected. So we think it makes a lot more sense to make it proportionally go up, the borrowing fee, as the net OI grows relative to the max OI for a particular pair or group of pairs. We think it makes a lot more sense than comparing it to the volt TVL. Also because, for example, a lot of OI on Forex, like 10 million is a lot compared to the Vault, but since these are very low volatility pairs, it's also not so much. It's maybe comparable to 2 million OI on crypto or something. And the second change is we are introducing an exponent to the formula. So before the formula was net OI divided by volt TVL to get the current borrowing fee. And now we're using net OI divided by max OI squared. So the effect it will have is the fee will be lower when the exposure is pretty low, which is what we want. But when the exposure gets pretty high, so in this case, let's say approximately above 50% of the max OI, then the fee will get higher and higher compared to the normal linear fee, which helps us hedge our risk a lot better, because the risk is not truly linear for us as the net OI goes up proportionally to max OI, because mathematically it is, but it takes so much more time to recover from a drawdown, from a big drawdown, than for the Vault, that it's more and more costly to have the Vault take a loss at a high net OI. So to make that reflected in the fee, now there will be an exponent of 2. So we are squaring the net OI divided by max OI ratio.
Math is hard for me, so I'm trusting that hedging the risk is something that this will do a lot better for us, because as it is now, we've made some great strides there.
But essentially, it's going to change like the ramping up of the borrowing fee. Like the curve is going to look different and be more how do you say, like to like kick in faster.
It will be cheaper than now for low exposures, which I think is good, but for high exposures it will be more expensive, because current borrowing fee for high exposures, when the OI is maxed out and everyone is on the right side of the OI, it's still just not enough to be fully safe, in our opinions. So, but we at the same time don't want to make the borrowing fee more expensive when the exposure is low. So the square exponent really achieves these two things really well, in our opinion. And in my opinion, long term we will also, so it's a bit off topic, but long term, to really scale, I think we're going to reintroduce something, so it will be different than funding fee farming. We're thinking about something like counter trades, or be called a bit different, but basically it will be trades that pay almost zero fee, that could farm a share of the borrowing fee, so that because having a high borrowing fee protects us from the risk of the exposure, but it's not a great UX for traders to pay a lot. So if we want to keep scaling OIs while not having crazy high APR cost of borrowing fee, we want to have some kind of incentive for counter trades to happen, which will balance the OI a bit, which will make the fee then cheaper again, so it stays a good UX for traders. So we're researching that, and probably some kind of system like this will be reintroduced. But now we have a way better formula compared to the funding fee, and most importantly, a share of the borrowing fee will always go to the Vault, so it will keep generating a good safety revenue stream for the Vault, for the over collateralization, but some of it we can use to incentivize counter trades, something similar.
Yeah, we have come a really far way, and there's a lot of innovation that's been packed into G-Trade.
Yeah, I think so as well. Absolutely. So, I mean, that's perfect. I'm glad to see the changes coming. Are we ready to move on to the big topic, Seb, or do you have anything else to say about this 6.4?
Yeah, maybe a few things. Like, for example, a very big positive point compared to other books will be that your stop losses and take profits cannot be partially filled. So if the price goes at your order, it will always be triggered in full, which I think is a big positive point. And yeah, honestly, I don't think that fully guarantees orders and execution for stop losses, take profit, limit stop orders. I don't think it exists anywhere else. On a regular exchange, your stop loss transforms into a market orders, because unlike limit orders for a stop loss, we want it to be executed anyway, because we want to exit the position regardless of the price. So you could suffer significant slippage on a regular exchange, and usually most people have their stop losses in the same place too. So usually when your stop loss is taken out, there's a lot of volatility, and that means it's not unusual to have a lot of slippage on your stop loss. So let's say, for example, you thought you would lose 30% on your stop loss, but you end up losing 40 or 50%. It's quite a common occurrence. So
Interesting. So this actually improves on the order book setup. That is awesome. That's very awesome. Cool. I'm hoping traders will really love or really appreciate the changes. So now we have our second topic, the governance and dev fee. So Seb, there's a few huge changes coming to how Gainsnetwork runs from a developer perspective. To my understanding, we're going to mint GNS and replace the direct pay that the dev fund receives, as this is a method to realign incentives. So what does it mean to realign incentives, and how is this going to impact the Gainsnetwork?
yeah, so incentive alignment is I don't know, it's kind of obvious, so it's hard to explain, but it's when you're aligned because you want the same thing, right? So for example, GNS holders want GNS to be adopted and to grow, and right now, for example, the dev fund earns its revenue directly in DAI from the trading activity. So it could, in theory, sell its GNS and it will keep earning its DAI revenue, which in this case, for example, is not fully aligned with the GNS token.
Yeah, gotcha. You're putting everybody on the same page, so the holder and yourself share the same rise and fall.
Exactly. And the dev fund revenue would only come from GNS staking that way. So if dev fund wants to keep earning, it needs to keep a lot of its GNS, and it's incentivized exactly the same way as any other community member, basically. So it removes the current difference there is, fully aligns the incentives.
Yeah, that sounds great. So as a result of this restructuring, what are we doing, or where's the dev fee going, since it's going away? So where's all that revenue going?
Sure, so it's fully redirected to GNS staking. So 100% of the current DAI revenue of the dev fund is redirected to a GNS staking pool. So that represents approximately 50% increase if we don't take into account some other things that I think we'll discuss now. So the difference also after this, so as you said, there will be there will be 1 million GNS tokens minted to the dev fund, to compensate for the redirection of the DAI fees to GNS staking. It approximately corresponds to 1 to 1.5 year of the DAI revenue. And so the supply will be increased by approximately 3.3%. And the revenue in GNS staking will increase by about 50%. But there is also something else to take into account, because until now the dev fund didn't stake his GNS, and now it will stake it, and that approximately accounts for represents a 10% dilution, because the stake GNS will be the 1 million plus the existing 1.27 billion. And the TVL is about 20 million GNS, I believe. So the dilution will be approximately 10%. So if we take everything into account, this part alone of the plan will increase the average DAI earned by a GNS staker by approximately 35%, taking into account the means and the dilution.
GNS minted to you, will it have any other effects, such as future voting power, if we move to governance?
Yeah, sure. Governance power will be based on the GNS token. So it also means that the fund has a more reasonable percent of the governance power. So after this mint, the total supply held by the dev fund will be just slightly above 7%. And yeah, that's it.
Okay, so next question. Yeah, this is a community compromise, which I mean that we've been discussing for feels like forever, but it's been like, I don't know, 2 months. But mint is sort of a scary word in crypto. So to see that a team is actually re-engineering the fee structure while giving a large boost to stakers is a relief. So Seb, what happens to the GNS that gets minted to you? Can you just sell it, or will there be some kind of vesting?
Good question. So it will be fully vested for 1 year. But yeah, I mean, I don't plan on selling it even in 1 year. So if you were wondering. But yeah, it will be fully vested for 1 year and staked in GNS staking.
Awesome. I mean, yeah, I mean, that's the only way to keep some of the FUD away is to stake it. And, Seb needs this money to earn his pay as a staker. So obviously, if he sold the GNS, he wouldn't have any income.
Correct.
So the community has had a lot of discussions about the second part of this change, which are the NFTs and how they function. So I know we're making changes to that based on the medium. We're kind of going away from the NFTs. Is that because that the NFT botting wasn't as decentralized as we think? Can you expand on that? I think I've heard people discuss that before.
Yeah, so there is 2 or 3 different reasons. So let's start with NFT bots. So currently, anyone who has an NFT can participate in triggering the limit, stop losses, take profit, and liquidations for the platform, and earn a share of the fees against that service. And the thing is, it's a very competitive system. So everyone is trying to get an edge over the other botters, to trigger first, to be faster, etc. And like any competitive system, unfortunately, that means it gets more and more centralized over time, because it gets harder to compete for the average botter. So the truth is, even though right now the system is open to everyone, it's fairly centralized due to its competitive nature. because it's very hard for the average botter to make a profit.
Yeah, we have a lot of botters that's been really, really optimizing their code, and I tried botting myself too, but yeah, it's quite a gap from what I know and what the top botters know in terms of
Mhm.
programming.
So even though it's open to all NFT holders, it still gets very centralized over time because one person can have 10, 20 NFTs and trigger all the orders. And if he's the fastest all the time, then everyone else shuts their bots off. So there's no reason for. I mean, people won't keep running bots if they're not profitable. So it does not offer strong guarantees of decentralization and availability.
Yeah, true.
And it's also pretty wasteful because since it's a competitive system, we need to spend a lot more on it for everyone to earn even a bit. So it's pretty wasteful also in that sense. Because that money didn't go straight to NFT holders. It only went to a few top botters who optimized their bots. And there was a lot of gas fees spent, link fees. So it's all very wasteful.
Yeah, true. So one of the major functions of the NFTs from a protocol perspective is using them to bot with, which we're all familiar with. But when we take this utility away, so without NFTs, how will we handle triggering orders? And did the bots compete with the value of the GNS token?
So that responsibility will be shifted to the oracles, because there's also something else that's interesting. So a system is really only as decentralized as its least decentralized part, right? And it wouldn't even be really useful to have like 50 bots running all the time to trigger orders, but only 8 oracles, because the system still relies on the oracles to fulfill the prices and to actually execute the trades. So it doesn't even make sense to have an NFT bot system more decentralized than the price feed itself. So I'm sorry, I forgot the question.
Yeah, so the NFT bots, are they competing with the value of the GNS token? Do you see it sort of like
Oh no, I'm sorry, I
know the
wanted
word.
to say something else. So that's second part of the question, I think, but we finish on the first part. So that responsibility gets shifted to oracles, and the thing is, they are even better positioned to execute these orders and to trigger them, because they are the source of the price feed. So they are directly connected to it. So there will be less latency, and also I think it will allow us to switch from a two-transaction system where NFT was triggered and oracles executed the order to a single transaction. Like there is no longer a need to make a request for to the oracles. And why would the oracles make a request to themselves, right? So it removes the transaction. That also means less gas and less delay in the UX in the end.
Excellent.
So regarding the NFTs competing with the GNS token, that's what you say, right?
Yeah.
Yeah, so in general, the issue, so there's really three parts, three main reasons why we want to merge the NFTs into the GNS token. Is because the bot system is not achieving what we want, we spend too much on it, and it's not achieving the results we want, and it's not sufficiently decentralized. The second part is the incentives of the GNS token and the NFTs are unfortunately not aligned, because GNS token holders, their best interest will be to set the NFT boost at 0 and just forget about NFTs, right? Whereas the best interest of NFT holders will be to increase their share of revenue capture. So they just don't have the same interest. So it's a bit, it's not fully optimized to have like two parts of the community who have different kinds of interests if we want to grow and reach our highest potential. So that's why we want to consolidate everything into GNS. And the third reason, of course, is because it will make everything much simpler. The only way of participating and owning a share of the platform will be through the GNS token instead of GNS token and 5 different types of NFTs and everything. It will just be much simpler for new users to participate.
Yeah, that does definitely simplify things. So since we're correcting the inefficiencies of this disalignment, we're going to do a NFT buyback. How did the community advisors come to the conclusion that we should phase them out? And have we done something like this before? Have NFTs changed function before?
So actually, the reasons I just gave them, it's the 3 reasons for the bot: incentive alignment and simplification. I'm not aware of another project that had a token and NFTs, so I don't think it already happened.
Okay, so yeah, another component with the NFTs, or another utility rather, is the boost to SSS, or single-sided staking with GNS. So will there be any mechanism to increase single-sided staking yield that the individual staker can use? And did this also compete with the value of the GNS token?
Yeah, of course. This directly competed with the GNS token because you could earn more yield without buying more GNS. So,
yeah.
And now the other part of the question. I'm sorry, I forgot.
Let's see. Yeah, will there be any mechanism? Or wait, that was the first part, but
yeah, but that's interesting. There will probably be a time-based incentive in the future, like a locking mechanism or multiplier points, something similar to reward long-term holders.
Yeah, because single-sided staking, it was because sorry for going on a tangent here, but like I don't know, around a year ago, it was very, very anticipated feature for the ecosystem, since you could either stake DAI or you could provide liquidity. But if you provided liquidity, it was sort of it wasn't really, you didn't get the full exposure to the GNS token. So the single-sided staking that we have today, it's still only like the first iteration. It's
correct. Yeah.
Am I correct in assuming? Am I correct in assuming that we'll build upon this with something like, I don't know, I'm just taking stuff like from the top of my head, like multiplier points or any sort of similar mechanic?
Yeah, 100%. It's really the first iteration. We made it as fast as possible and very simple. So it was easy to test and audit, so it's very secure. We didn't want to make it complex because we wanted to release it as soon as possible. But there will definitely be some time-based incentives like multiplier points locking and maybe something like a receipt token.
Awesome. I think the community, and myself included, has a little bit of responsibility for the release schedule of the SSS, because I think all we'd ever asked was when SSS, and I'm sure that added a little bit of pressure to just make a simple system. So I'm sorry for my part in that. I definitely was one of those people. So as we're discussing the NFT buyout, some people are saying in Discord that's not enough. Some people are saying, oh, it's good. So how did we come up with the values for the NFT buyout?
So we discussed a long time on the best methodology to calculate their prices. And the most fair we have found is to look through all the transactions that happened on OpenSea and convert them to GNS and take their average GNS sale price since the beginning, basically. So that way, it really takes into account the earlier times where NFTs evolved a bit over time. So at some point, their boost was reduced, etc. So that way, we really take into account their full history and priced into GNS, of course, because what matters here is the NFT to GNS ratio, since they approximately have the same upside.
Yeah, so we're consolidating like the market cap of the NFTs into the market cap of GNS. And like in summary, we're minting a buyout of NFTs in order to remove the utility and also redirect the NFT bot revenue and NFT staking revenue to GNS. So what kind of boost is going to be expected from redirecting the NFT revenue? Because we've already talked about the changes that will come from redirecting the dev fund. But those numbers change. Those numbers change a bit when we factor in the NFT.
So if we just take NFTs into account, if we just take into account the NFTs bot revenue redirected to SSS, the difference will be approximately 34%, because 80% of NFT bot fees will be redirected to GNS staking and 20% to oracles for their new responsibility of triggering limit orders. And also the average NFT boost right now across Polygon and Arbitrum is 17%. So that means once NFT boosts go away, the average GNS staker without NFTs will earn also 17% more. So 34 and 17. And it will dilute the supply by right above 11%, 11.07%. Because bronze NFTs will be compensated with 800 GNS, silver 1200, gold 1.8k, platinum 3.7k, and diamond 12k, which makes a total of 3.36 million GNS tokens, which represents just above 11%, 11.07%. And so 34% increase from NFT bot fees of GNS staking revenue and 17 from the boost. So we see the boost is always way higher than the supply mint, which is why it's such a good solution for the GNS token, and NFTs get compensated very fairly as well. Most of them are significantly above their current floor prices on OpenSea.
And I'm not sure everyone's aware of how the single-sided staking boost worked, because if you had a diamond, for example, with 13%, it gave you revenue as if you had 13% more GNS staked.
Exactly. So it took that, if we want, from other stakers, because instead of having, let's say, you had 100k GNS, it will count as if you had 113k GNS. So your share of the pool is bigger.
Yeah, I mean, I can't afford a diamond, so that's good news to me. As a silver owner, that's all I have. So I feel like it was a fair compensation, and I think that everybody, GNS holder, NFT holder, I mean, again, it's just forcing alignment. We're here united in the GNS token. So that said, let's do a final summary. So with the dev fee redirecting to SSS and the NFT bot revenue now redirecting to SSS, what is the average staker's total boost going to be to SSS?
Yeah, great question. So if we combine parts 1 and 2, we get a 60% boost, taking into account the redirected revenue from dev and NFTs, the NFT boost redistributed to everyone, the supply increase, and the dilution from the fund staking. So we get right above 60% boost for the current GNS stakers, assuming the same revenue, of course. So that means the share of revenue going to the GNS token from Gtrade goes from 33% currently to 61%, which I believe is we can confidently say that is the highest of any perpetual platform, decentralized leverage trading platform.
I think some competing platforms have like maybe the best, at best, 30% of the revenue stream going to the stakers.
Correct.
So, I mean, this is like the shot heard around the world. That is quite, and you haven't even increased fees to the trader by doing this.
Exactly. It's just redirecting and optimizing the revenue flow and aligning incentives. And so the supply will be increased by 14.37%, 4.36 million GNS token. And supply right now is 30.34. So the boost is obviously way higher than the supply increase, which is why it's such a good deal for GNS.
Absolutely, and they were well received by most of the community. So I think everybody thinks this is the path forward.
Oh, sorry, we haven't talked about the NFTs vesting. So when you burn your NFT, you will either receive a linear vest over 6 months of your GNS, or you can unlock it directly against a 25% penalty, which goes into the Go fund. And later on, we can decide to either burn it or use it for something else as the community chooses. So, and during the vest,
Awesome. So it's not going to be dumped all at once.
during the vest, the GNS will be staked, so you will earn DAI also. So, for example, the linear vest, it will basically make so that at the beginning you cannot unstake anything, but it's staked, and over time you can unstake more and more from the pool. But you can always harvest your DAI. Keeps earning DAI all the time.
That's awesome. That's what we wanted to hear too, because I definitely want that staking revenue continued from my NFT, which isn't much, but it's very appreciated, the thoughtfulness there.
Yeah, and it's a good compromise as well. Like we're giving the option to cash out or like directly, or if you want to vest it, you can do that as well. So I'm thinking that maybe if we skip the next question, and because that sort of covered in the last question, which is basically just community questions. There are a few in the chat. I've copy pasted one from Maine as well.
Yeah, Seb wants to go through those and take a look. I see Kubile has posted, Jerome posted a novel, so we'll look at some of these questions and see what the community has to, what Seb has to say about them. One at the very bottom here. So will refers still be paid in GNS minted? So the ambassador program and so forth.
Yeah, that doesn't change. Oh, by the way, since the NFT bots reward right now, the DAI goes into the vault and it's minted as GNS. We will probably need to decrease the burn percentage to take that into account. Otherwise, because right now the burn is set to also offset the NFT bot rewards, so we will probably need to tweak the burn percentage to achieve the same deflation.
Yeah, because in case people didn't know, it's sometimes people ask like why are NFT bots and refers paid in DAI? Oh no, sorry, GNS, and it's it has to do with like if that the DAI that comes from the revenue goes into the DAI vault, and it's like the corresponding amount of GNS gets minted as sort of a way to increase the over collateral. So that definitely ties into like the changes to keep the over collateral layer sufficiently collateralized.
Azoo321 asks, question on lookbacks. Isn't this risky regarding front running an oracle? For example, in synthetics, all orders are delayed by a few seconds to avoid front running. Is the time in which I submit an exact order price taken?
Yeah, there is no front running that can happen on our platform due to the way the trading works. It just uses the median spot price from APIs, so the order of execution doesn't matter. So yeah, it just uses the price when your order is submitted.
MX555MX asks, for the new borrow formula, when we have high open interest, are users expected to pay more than in the previous?
Yeah, probably. But we can also probably increase the max OIs a bit. It depends. But yeah, at very high percent of max OI, probably a bit more. But if we also make the max OI bigger, it won't change anything compared to now. But it will still probably be a bit more expensive when the max OI is full.
Right. Kublai asks, now that NFTs are discontinued, will the GNS minted to pay bots stop when we transition to the new system?
So will the GNS minting stop from NFT bots?
Or will the oracles be paid in DAI or GNS? I think is what he might be getting at.
We could in theory pay them in GNS. So right now we pay them in Link. We could in theory pay them in any token. So it could be doable to send the corresponding DAI into the vault and pay their reward for triggering orders in GNS. But we haven't decided yet.
Gotcha. I've got a question from B. This one seems a little complex for me, but we'll see if there's a simple answer. What is the average running monthly cost for operations and dev salaries? Assuming that the GNS price stays the same today, will staking yield be enough to pay for everything?
I don't know by heart, but we have approximately 10 people on the team, a bit more than that. I think salaries are about 150k a month, something like that. So okay, the question was, so dev salaries are paid by the GovFund, not the dev fund. But the GovFund is profitable after each month. We've been approximately increasing by 100k a month after paying everything.
That's cash flow positive, people. That's gains. All right. So going down the questions. All right. Somebody said, this is a kind of tough one. They're saying that the dev fund is being compensated for selling tokens during the Luna crash. Was your mistake that the drain of liquidity in the vault was possible, and that this is payment for that mistake? Do you agree with that? I don't quite feel that way.
Yeah, so it's getting compensated for the redirection of the dev revenue, not because of the Luna event. if the Luna event was mentioned in the article, it's to add a bit more context, because the dev fund lost about 850k GNS tokens by selling OTC at 50 cents to recollateralize the vault. I don't think we will be where we are at now if this didn't happen. But the 1 million mint is not a compensation for that. It's a compensation for the redirection of the revenue. It just gives some context that the mint is barely above what was lost through that event.
I see. Yeah. So even if that had happened or didn't happen, we would still be here trying to realign.
Exactly.
Perfect.
So in that sense, it was only my loss.
Yeah, and we thank you for saving the platform. Like seriously.
Yeah, I mean, like you said, if that hadn't happened, I'm pretty sure that we wouldn't be here having an AMA today.
Yeah.
Worth it.
Because that was some scary times.
Mm-hmm.
Yeah, that was a long day.
Yeah.
But so Jerome has a few questions. Let me just kind of glance over them. I think the most interesting one is that in Telegram you mentioned that using Chainlink's CCIP is the end game. So can you explain about that in more detail? What does that mean?
Yeah, because it will make all kind of cross-chain stuff possible, probably easy and very secure. So, for example, we could think about a single GNS staking pool that earns fees from all chains in many different collaterals too. Once we have more collaterals, we could think of one DAI vault for all chains, for example. So that would remove liquidity fragmentation, basically. So for example, right now, if we launch on a new chain, of course there is new volume, and that allows us to fund new liquidity. But after this, it will mean if we launch on a new chain, we just have more volume, more revenue, but we can use the existing liquidity we have, which is pretty insane.
Yeah, you can combine the liquidity from Polygon and Arbitrum or a third chain even.
Yeah.
And then we can just scale when CCIP is something we can integrate.
Because, for example, right now, Polygon hasn't a lot of volume share, so the max OIs aren't very high and everything. But if we could put all that liquidity in common, that will allow, for example, if suddenly a random whale on Polygon wanted a big position size, he could still do it. Whereas now, he can't. He will have to go on Arbitrum.
Yeah, that's sweet. And I know it just released, so we got to see how that plays out. So that's on the radar for Gainsnetwork guys. So that is a pretty big update when that can finally occur.
Yeah, for the scaling, it's pretty insane because we've seen that honestly a lot of chains have different user bases, and people that use some chains sometimes will favor a product that's on their chain even if it's worse. So I think there is a lot of value to expand on as many chains as possible, but of course having to bootstrap a new vault every time makes it less realistic. So
yeah,
pretty big game changer.
We have time for a few more questions. Jerome, I'm going to ask two of Jerome's questions of his 5-part series here. When will we aggressively market our product? Do you agree to spend that we're spending enough resources promoting and building Gainsnetwork?
So we are actually already doing our best marketing the platform through Twitter, through influencers, we have a partnership with Crypto Banter on YouTube, for example. We're already doing honestly a lot of efforts to market the platform. The thing we don't want to do is spend a lot just for the sake of spending and not having any results. Honestly, it's very easy to spend hundreds of thousands on marketing without having any result, and I don't think that's the goal. But so we're making our best over time to find new ways to bring new traders and increase the marketing budget while it being effective, not spending for nothing. And honestly, good marketing opportunities are fairly rare. So we are working on that.
Yeah, especially we're in a bear market still. I mean, we're kind of hopefully we're being on the uptrend of that golden bull run, starting the last month or so, hopefully, but we don't know. So it seems like, guys, I know that marketing, in a bear seems to be a little difficult. So bear with us. There's a lot going on, and I think the team is doing some really good stuff with marketing, and it will pay its dividends in the future.
And we are continuously evaluating new potential influencers and similar ways of marketing. But we want to make sure, like Seb said, that we're getting something from the money that we spend. So we're evaluating a lot of people and a lot of actors to ensure that that we get our money's worth.
Yeah. Another question from Azuz321. He feels that the yearly rate of borrowing fees are a bit high. This makes us less competitive versus other venues. With the competition decreasing fees, and I don't know what they are decreasing to. We'll find out. Are you planning to adjust fees?
So for borrowing fees, when the max open interest is high, I agree that the fee is on the high side. It's not ideal, but at the same time, if some traders are extremely convinced the price will go in one direction over a very short period of time, like 1 or 2 days, it can make sense to pay such a high rate. So it still allows us to have a lot more max OI than we could offer otherwise. However, as I said, the target is really to introduce a new incentive for counter trades, which will hedge some of our OI and allow the borrowing fee to stay fairly low as the open interest increases. That's key, I think, to really scaling beyond where we are. But yeah, it's step by step. For now, I think we are doing a really good job with that borrowing fee, and the formula is working really well. It's improved the edge significantly, and it's generating a lot of revenue. And we saw the max OI be used a lot. But long term, I do agree that we want an incentive to balance the OI to keep the borrowing fees in a lower range, so we can keep scaling the max OIs.
Perfect.
And stay relatively low in terms of fees.
All right, we're just getting past an hour. Seb, do you have time for more questions, or what would you like to wrap up?
I can do a few more.
Okay. Jerome asks about the casino. I think this was discussed recently in the Telegram. Is the casino idea still on the back burner? Seems like there might be an opening for somebody to do it right, with Rollbit looking like a scam. I don't know much about Rollbit, but I think Seb discussed that on TG in the past.
Yeah, so there will be a point where it becomes interesting to work on new products, because that will of course diversify our we won't depend on trading as much. Maybe the casino could grow faster, or we don't know. But for now, we think that all our attention and efforts should go into the G-Trade platform, because we are honestly still at 1% of the potential. A few hundred daily traders is not where we are stopping. So
yeah, absolutely. And if other products came out in the future, they'd still be around the GNS token, correct?
Yeah, for sure. We'll be under the Gainsnetwork umbrella.
And staking too, correct?
Mm-hmm. And the same vault.
So
That's what's really incredible.
Oh, I didn't even think about that. So in theory, a G bet would be built off of the DAI vault or something like that.
And then DAI stakers will actually be exposed to both traders' PNL and opposite side of bets, which makes it more diversified and more interesting risk profile.
Awesome, and I'm getting a vision here, and then that coupled with CCIP, I mean, that's
And
the
that
sky's the
combined
limit.
with cross-chain, yeah, it's pretty insane.
Wow. Okay, so let's see what happens in the future because that sounds awesome.
Oh, by the way, sorry. Regarding if competition decreases fees, we will decrease to match them. So
Okay.
that's the answer.
Yeah, we our capital efficiency allows us to adjust things like that pretty aggressively, from what I understand.
Correct.
Okay. And Kublai is typing. Kublai, if you can get that out there, I'll scroll through, make sure I didn't miss anything that was interesting. Peter 2049 asks, can we build a system where limit orders are made known and a user can come along and directly take the other side of the order so everybody can be a market maker?
That would be possible, but honestly, it seems like a very rare use case. I don't think our goal is to match orders together. Our goal is really to use the DAI Vault as counterparty. So not very interested in that.
Okay, so we're not going to pursue the order book route so much. All right. Well, I mean, I think that is all of the questions. Kublai seems to be telling us he's happy with his latest typings there. Anything? Okay, last question. Anything you can share on what is next after Monday's lookbacks?
Yeah, so the biggest priority will be coding the changes for the tokenomics plan we announced yesterday. It will take a bit of time. We target September 1st, might be a bit after, it depends on how much time it takes. But also in parallel, we've been working on PowerShells and a few other things that will be very interesting. But the biggest priority will be this tokenomic exchange and PowerShells after and some other things.
Yep. Yeah. I mean, I agree with what Kublai is saying too. Seeing the platform go forward leaps and bounds continuously is great to see. It's been quite a ride since I got involved in G Trade. I think that's just about it. It's a little bit over an hour. Thank you everybody for coming to the AMA. We appreciate everybody showing up, and we appreciate the changes that Seb is implementing into the SSS boost. I mean, 61% is massive, and some of you may be able to replace your job with that. I mean, that's crazy to think about, but it's true. That's amazing. So I'd like to thank everybody. Thanks Seb for coming and telling us about the changes to 6.4 to the incentive alignment and so forth. Thank you so much, Seb.
Thank you.
This will be available on YouTube later, and just if you haven't seen it or know somebody that hasn't seen it, we'll post the links where appropriate, guys.
Yeah, so just to conclude, I think now is a perfect timing to work on this incentive alignment. So all the progress that we make gets valued as much as possible, and we're all aligned, and then we can really reach the highest potential. It's now the best time to do it.
Perfect. Awesome. Well, thanks, Seb. Thanks, Vess. It was good chatting with you guys this morning.
Thanks, everyone.
Yeah, thanks, everyone.
Right. Have a good day,
Bye.
guys. Catch you later.